We're getting kind of official around here, you know? I'm just saying, we got stuff going on. The music works every day, right? With no issue. It's like for this year, maybe we just do our thing. Look out, you know? I want to mess it all up now. Now I want to do something else crazy. Leave it to me, I'll mess it up. I'll figure it out. Hey, welcome to the Closing Beat, everybody. Happy Thursday. How's it going out there? Hope you're having a good day. I am prepared. Things are going well as far as making this thing work every day, because we really have no idea what we're doing when it comes to the graphics and the lights and whatnot. Just winging it. That's what we do. But one thing we're not winging is the stock market, our investments and everything going well. All is good out there today. Great record move today for stocks, largely because of the retail sales news. Initial jobless claims were great. We'll go through that in a second. Tonight is our Wine and Wealth class for clients. Actually going to be recorded. Bear with me. A small family event to get to. And so I'm going to record that, post it. We're doing position updates, a little rebalancing, a little position updating there, some profit taking. And so I'm going to cover all that in the detail that it turns out you guys actually like. So if you're one of our clients, that'll be posted on the site in the dojo, actually. On our research site, if you're interested in joining that, you can. It's $13 a month. If you're not a client, it's free if you are clients. We've done lessons on earnings stats there. I published the trading strategy video for research members as well. It was one of our Wine and Wealth classes that we did. So that's available for you. And then did a cool transportation breakdown the other day of the two different areas that you look for in transport stocks. That's actually holding true here today and has been for some time. So hope you'll check that out. If you're interested, come join us. Hey, you control the membership, by the way. We don't play any games there. So if you want to do it for a while, a couple months go by, you don't like it or whatever, you just cancel. No big deal. We won't even bug you. We won't spam you or anything like that. As far as the stock market goes today, decent gains, right? You got markets at record highs. Like I said, it started off with pretty much the economic news to kick things off. But if we go over to the old NASDAQ to get things going here, that's going to be your best performer. It's up now 9% year to date. That's just at all-time highs there. And today, that's going to be driven by Apple. So Apple, one of the bigger contributors here today. NVIDIA in the NASDAQ, just a nice, awesome move there in the last couple days. Great spike on NVIDIA with the semiconductors. You got Microsoft also hitting new highs. That I've mentioned a couple times now. I don't know why that's all of a sudden taken off, gaining so much interest, but that's one of the bigger contributors here today. And Amazon, maybe finally waking up there, still in a big sloppy sideways consolidation range there, new CEO taking over and everything. So maybe a little bit of question from investors there whether they should be excited about the stock still. I think you probably should. If we look over at the S&P today, that comes in second place, and as far as performance for the day, that's going to be due to Apple again and the semiconductors. I already mentioned NVIDIA, but if you look through the semiconductors, something like Xilinx or some of the others that were right smack at that 200-day moving average, my red line on the charts, if you're watching this, not listening. And so I won't go through all the semiconductors. Just know you want to take a look over there after that little pullback that you had. Semiconductors waking up just a little bit. Honorable mention to Newmont finally breaks out. So this is that gold mining stock. People asked a couple times there, price of gold and everything. So you got this downtrend, very clean and obvious technical downtrend. A little consolidation here. You finally got your action to move you outside of the range. The downtrend is now officially broken there. On the bottom of the S&P here today, it's going to be the banks, right? The banks with their earnings, Truist Financial reporting earnings. That's lower on the day. Schwab, kind of a funny story with Schwab. One of their transfer department messed up something the other day. Bank of America down 3% as well, reporting earnings as well. And then cruise lines, right? You got cruise lines down just a little bit. Airlines down on the day. Those are some of your weaker stocks in the S&P there. So if you look around today, or you didn't see the news, initial jobless claims come in at 576,000. We were expecting 695,000. So those filing for new unemployment claims, really, really strong drop there. That's a good thing, right? So very good news to start the day. It wouldn't have moved the markets, though, if we didn't have the retail sales numbers, because continuing claims continue to be really at records. It's not a good thing there. Those staying on unemployment. So those two numbers come out together there. So that's the case there. Retail sales are going to be the big focus here today. Blew the doors off of any expectation that was out there. You got vaccines being taken. You got stimulus money apparently being spent on junk out there, not for necessities and everything. Last month you had the thing in Texas, the storms and everything that kind of shut things down. That hurt the numbers last month. We were up about 10% on retail sales, 9.8, which is essentially 4 percentage points higher, rounding up, than anyone had expected. Every analyst out there that analyzed this here, it's the second largest gain ever. May of last year, actually. 18.3% was the biggest one there. And here's the funny part. I know you're spending money on junk because you can actually break the retail sales number down into groups or sectors. So I'm going to take a look at that with you here. Here's a breakdown of that. And who's the best performing area of retail? Sporting goods. Sporting goods. People getting back to playing sports, apparently. 23.5% increase month over month compared to last month in sporting goods. You're spending money on clothing. I don't blame you. Maybe you're getting back to work, spend a little money on clothing. Auto parts, you're doing all your tweaks, updates, getting your car ready to go, getting back to work. So it kind of makes sense with that whole getting back to work vibe there. Bars and restaurants, 13%. Building materials we knew was already high. They did well last month as well. Gas in general, that's higher. So look at everybody going back to work, needing new wipers, oil changes, need some new clothes, put the kids back into sports things there. And so that's the big driver if you look over here. Everything else that still did well, but that was what performed well during the virus, right? So getting your new electronics, buying stuff online, shopping online in general, that's taken a back seat now to the, hey, I got to go out and do stuff sort of thing. So kind of interesting there. Also, that's the reason the markets were so excited today, because it's another indicator that maybe we're putting this hell that we've lived through behind us little by little. Hopefully that's the case. Now, one other way that we broke this down here, by the way, retail sales, it's the largest four gains, like we were up 10%, right? Big, huge gain here, second largest gain ever. The largest four gains actually have happened in the last year. So not only do we have the sharpest decline in retail sales ever, the COVID drop there, but we also have the sharpest recovery ever in history as well. That goes back to 1992. That's as far back as we can go there. So you can see by the charts there that retail sales as a whole have not been shared together, right? It's not like a fair, even split there. We've got those that are winning at the moment. Think about those of you who are looking for stocks to play. This is where the action's going right now in the retail space. Sporting goods, clothing, auto parts dealers. Think about that. Dick's Sporting Goods. You got all the clothing companies out there, PVH, etc. You got auto parts dealers. That's going to be your O'Reilly, your AutoZone, Pep Boys, which is owned by AutoZone. Bars and restaurants, if you're looking at things like Darden restaurants and all of those that have not necessarily your fast dining, what do you call it, drive-through dining, but the others as well. And then you kind of filter out into the rest of them there. We can also see which areas are gaining more share of the retail dollar that people are willing to spend. Zoom in just a little bit and you can see that the online, we call it non-store, but the online, if you want to look it up, they'll say non-store, but that's essentially just being, online. They call it clicks, right? So you're shopping by clicking. They're getting the greatest share there. So it's not to discount the online retailers, but it's to say at least temporarily people are going out and actually physically buying stuff. Motor vehicles and parts and things, that's the other category. That would be your AutoZones, O'Reilly, and things like that. So these guys taking a greater share here where bars and restaurants lost. This is over through the COVID mess that we went through there. Obviously, bars and restaurants did poorly. Clothing did poorly. Gas stations as well. All of that's changing. That tide is now obviously going the other direction there. So something interesting I thought I'd put together for you. If you're interested in taking a look at that one, well, now you can, because that's there for you. Earnings. You gotta just, earnings, we're just getting started here, but let's take a look at a few things. You got BlackRock. So BlackRock hitting new highs there, up 2% on the day. Mixed earnings overall, but check this out. I found this fascinating. Their assets under management. So Jazz Wealth, just to give you an idea, we're a small fish in a big pond. Jazz Wealth manages about $120 million. To me, that's a lot. To BlackRock, that's not even a blip on their radar. $9 trillion is what they now manage overall. Their assets under management grew by 50%, right? Their revenues were up 2%. Now, for most companies, you'd think, all right, 2%, good job, right? You get a little increase there. 2% on that kind of money. I don't even know if a calculator has that many zeros there, but that's a ton there. The CEO also said he is incredibly bullish on the stock market. His words, not mine there. So that's BlackRock, and probably should have gained a little bit more today, but beast out there. Bank of America down about 3% on the day. They did beat on earnings. What we talked about yesterday with JP Morgan and Wells Fargo, loan balances, mortgages, things like that. Very comparable if you're looking at Bank of America. Investment banking, which has been killing it at all these different big firms here, up 23%, and they're doing a $25 billion share buyback. Shares just down a touch on the day. Otherwise, in a very, very strong uptrend overall. A couple other earnings we'll cover here in just a little bit. Let's move on to our sector breakdown for the day. Let's take a look because I got some different stuff here for you today. All right, yesterday we get a pop in oil. Energy was one of the better performing areas. Today is one of the worst performing. So a little bit of a pullback after just a quick, exciting little pop there. Gas prices. Gas prices. So gas prices are moving higher. You know this. If we go back to these here, you see people are spending more going out there in the, getting gas, driving more to work. But here's where gas prices are. They've been higher since Election Day, and that's not to pick on Joe Biden. Actually, when Trump took office, gas prices were higher for the next couple months after that as well, so it seems like it's kind of normal. But here's where we stand. Gas prices well off of their lows. National average $2.93 or $2.94 a gallon. I don't think we pay that here. Actually, that sounds a little high. We might have a better deal. However, when you look at that, before you go throwing blame around everywhere, take a look at the average. The average is actually 2.91. So we're right there, 2.91. We're sitting at 2.94, just a tick above average if you're looking back the last 10 years. I think it's a touch over 10 years there. Now, the problem is gas is up 27% since January 1st. Gas being up 27%. So you ask yourself, okay, gas prices moved higher through the election and now through this year, but is it normal for them to be up 27% overall? Nope, it's not normal. Actually, I'll tell you that one if you're curious about that. That is the largest percentage increase in the last 10 years, so this gain. Put it in a different chart to kind of show you what's going on this year versus the average if you want to take a look. So being up 27% at its peak there is twice the average, right? 12% is the average gain from the beginning of the year to this very moment right now. So if you're just curious what that is. Now, you can see how we've rapidly accelerated, maybe a little too far, too fast. I do that all the time where we talk about stocks that have gone too far, too fast, and maybe due for a pullback. One other thing that I find interesting, if you're looking at the average price movement of gasoline throughout the year, contrary to popular belief, gas doesn't actually go up over the summertime. We rally into the summer, and then gas prices flatline. So those of you that say, well, I'm not going to take a trip because gas prices are crazy. They're already crazy. They're already there. Take your stimulus money and buy some gas, go on a trip or something, because they tend to flatten out, then decline towards the end of the year as we get into the winter time of the year there. So kind of interesting. If you want to share that with your friends, let them know, hey, gas prices probably have peaked here. There might be a little bit more room to go, but as we head into the summertime, it's actually quite normal for gas to start to settle down there. Anyways, that's that for the interesting things here for you today. If we look at healthcare, that was one of the better performing sectors here today. Was in first place for the majority of the day. If you look at the, what would be like a dark green line there, see how it's at the top all day long. It was in first place for the most part, and then right at the end of the day, it didn't pull back. It's just that those other two sectors, tech and REITs, got a little pop towards the end of the day there. If you're looking inside of healthcare, what you're going to find is United Healthcare is your biggest contributor. United Healthcare beat on earnings. Analyst estimates were officially 9% lower. The highest estimate was 9% lower, so they did a great job there in terms of that one. They raised their guidance again. They said, hey, we paid less in premiums than we thought we were going to have to pay there. And so it also took their competitors higher as well. Cool way to see that. You go right into healthcare. So I'll go over here. We'll just pop into healthcare. You can see the same move on the charts there. We know that the biggest contributor today was United Healthcare. If we click on that, you can see their competitors in the larger green bubbles there also they call it a sympathy rally, right? So United Healthcare did well. Everybody says, well, if they did it, then these guys probably will do some version of that in terms of beating. They have earnings coming up. That's Anthem and Cigna and things like that. If you look over to airlines, so this is going to be in the industrials, right? So in the industrials, the airlines were what dragged you down. You had Delta Airlines down about 2.8% today. Middle seat still blocked on Delta, which is kind of funny because if you think about it, Spirit, they're just like, whatever, let's just fill it up. I mean, they've been filling up their seats like the whole year, right? I mean, they don't care less. We thought we were getting on a Spirit flight. a while back, and we're like, the seats are going to be empty. It's going to be great. Ticker symbol is SAVE. And nope, there's people in the middle seats there. They don't mind. But Delta is blocked out until April. They said, look, we lost some money. Well, they lost a lot of money, but they said we're going to be profitable by the middle of the year. Later in the year, we'll be profitable there. So a little bit of a reset price-wise on Delta. And so for that, just a tiny, tiny, tiny bit of pressure in the industrials. If you want to go look inside of it, we'll go over here. You can see the same thing here as it loads up on the daily chart. And then we'll look down to the downside there. You got Delta and the other airlines. Just had a rough day today. Not a big deal. I think in the grand scheme of things, the pullback is kind of interesting on Delta. So maybe something to check out there. All right, moving on over to stocks in the news today. Let's see what's going on, because there's a lot going on out there. Dell going to spin off VMware. They own like 80%, somewhere in there, 80% of VMware. They're going to spin it off. It makes sense. Spin-offs tend to be a good deal for companies that do that. Take a look at Carrier. Take a look at Otis Elevator. It's been nothing but good for them since they were spun off from United Technologies. And I believe, that's not going to come up. So good news for them. Obviously, it's a good thing to do. Now we just need limited brands to do that with Bath & Body Works, right? They keep saying they're going to do it. We just need to get them to do that. 81% is what Dell owns of VMware. American Eagle guides higher, saying that demand is accelerating in their stores. Now we know, right? Now we know that that's in fact true, and they're not just filling you full of the nonsense there, right? Because where is all the demand? Clothing. Right, mostly 18% higher. So American Eagle is essentially telling you right now we're benefiting from that. Some of that action that you saw in March came to American Eagle's stores. And so there you go. Good reason for the stock to be at all-time highs for the moment. Bed Bath & Beyond, they reported earnings, and this is a story of the market giveth and the market taketh away there. So Bed Bath & Beyond, not bad, like earnings-wise. Digital sales up 86%, so that whole shift that they're trying to accomplish there, going well, no problems. But the problem is they came out a few weeks ago and they guided higher. So that's usually a hint that things are going better than expected. So they guided higher, but then when they released earnings, they didn't hit that number. They were down here. So Wall Street's like, what the heck, man? You lied to us. You said you were doing this, you did this. That's the simple explanation of it without, being a total nerd about it. But that's what's going on there with Bed Bath & Beyond if you happen to be playing along today. Costco up 1.5% on the day. They increased their dividend as they normally do. They're now up to 79 cents a quarter from 70 cents a quarter. That yield puts you still under 1%, but still, they're what's known as a dividend... there's a name for it, dividend aristocrat, right? So they tend to increase their dividend as they do better. They do not hold back. Ford finished perfectly flat on the day. They're going to have to continue production cuts, man. This semiconductor thing's not going away, right? We need more chips out there. We need more to produce these cars that continue to have more and more and more computerized stuff on them, or just be full-on electric. And what are they going to do? So they said, we're going to have to keep cutting production. It's not a good sign for the other automakers out there if you're paying attention. Also, overseas last night, members of Japan's ruling party, they talked about canceling the Tokyo Olympics. That's a real possibility because that's gaining more and more. The volume is getting louder over there for that. We'll let the stream catch up here for a second, and then tomorrow, earnings, Morgan Stanley, PNC Bank, and State Street, we happen to own that, Bank of New York. They'll be reporting earnings tomorrow. You got Ally reporting as well, and then Kansas City Southern starts the rails with their earnings. And remember, if you're looking at something like Kansas City Southern, they've been doing well. This is the one where it was kind of odd, where they sort of blasted off there and we said, well, that's odd. That's one of the stronger ones. The rest of them weren't so strong. Can you buy that? Is that something you need to run away from? Earnings ought to solve that problem for you tomorrow. No real dividends or anything. You got Fed members speaking tomorrow. B. Riley is taking the place of Michaels in the S&P 600 would be the last little bit of news. I think that's the last bit of news that I have for you overall. Remember, tonight's class will be recorded. I'm going to go over the positions and the updates, and it's kind of a test. I want to kind of see, people seem to like the detailed descriptions of why we make changes in our portfolios, so I'm going to go through that. I will do that shortly and get that posted for you. And let's see what questions you might have if you have any. Giovanni, thoughts on Viacom? Yeah, it's a pain in my side right now. Why is this not working? Viacom. There you go. So down just a touch here today. I have a whole slew of different positions here. The good news is the 55 calls that I sold are essentially worthless, so I collected a little more credit there, but I've got some defense to play on that trade. You have the $45 calls. So it depends on where you bought them. Don't like to see people buy out of the money calls. You don't like to do things like that. I'm hoping for a bounce with you, just a small bounce. So hopefully we get that. But I don't like that you have the out of the money calls. That part's a little, you're sort of banking on a lottery ticket there. That's a tough one. Oh, I think coin was lower today again. I did look at them for you guys, but yeah, it closed down 322. Slight sell-off there. Careful. I'll say it like I said yesterday. Careful. Be careful on that one. That is, make sure you know what you're buying. Yeah. Tandra says, is this true bull rally or just setting up for a bull trap, blow off top? How the move similar to blow off top? So my thoughts on this are, I actually hope it gets worse, meaning, higher before it starts to pull back. And the reason for that is if you can get a climactic or parabolic move to the upside, they're hard to watch because you're going to miss out on, some really great days if you're not participating. But that's the kind of move where you can, with more certainty, know that we're putting in a top rather than say, I don't know, it's just going to fall randomly. So I'm kind of hoping that it does blast off a little bit. The news is overly exciting for a few days. Everything rallies and we can just get that blow off top. I think it's early to say, but hopefully we'll get that. That's what I want there. Harry says, thoughts on the rates short squeeze there? Yeah, I got a couple questions on that here today. We'll go over to bonds. I'll use the ETF today. There we go. So looking at this basically is what Harry's talking about. So with the price of bonds moving lower, rates were moving higher, right? And so now what you have today is the price moving higher, so rates popping lower by a pretty sharp amount there. I think you've really started to solidify that you can't fight the Fed, and here you go. Here's people saying, you can't fight the Fed, I'm taking my shot, and I would agree with this move here, kind of thinking it's going to continue, right? Can't fight the Fed when there's unlimited dollars. How do you compete against that? What happens to the S&P if crypto markets crash? What happened last time the crypto markets essentially crashed, right? They pulled back harder than they had ever had. Nothing. I think you'd see the regulators, the Treasury Secretary, she's been pretty vocal about that. I think you see them get more vocal at that point. And hopefully that doesn't happen because with the new SEC chairman, there's really a larger and larger sort of drumbeat towards letting these things have their own ETFs, letting these things get out there. And as long as Bitcoin, really everybody's focused on Bitcoin, but as long as that doesn't get too volatile, then you have a reason for them to accept it for the first time. And I would cheer that on. Yeah. You think Virgin Galactic is screwed? I mean, I don't think they're screwed. Obviously, there's already a lot of competition. He took his 150-something million, 155 million, I think. Old Richard Branson took some dough there. He sold 5.584 million shares for $26.81 earlier in the week, Monday, Tuesday, and Wednesday. Yeah. And I know the chairman sold, but that was a while ago, right? He sold $21 million. So Richard Branson sells 5.5 million shares. He owns 57 million, right? 56. Yeah. So I don't think that's a problem, personally. What is he trying to do there? He's got other ideas, man. He's a cool guy. He's got other existing businesses. He wants to fund all of those. At least that's what he says. We'll see. It's good luck to the 600 people that paid, $250,000 to get themselves to space. Hopefully they can get that done. I think that'd be cool. With housing as hot as it is hard to start a position in some of those. We're entering that time of year where housing products tend to get a little bit weak. So housing itself can continue to run hot. The Fed welcomes it and all that great stuff. But the products themselves, this tends to be that slower time of year as you get into May, June, and July. I don't know why that is, but if you wanted to plot the average performance of Sherwin-Williams and things like that, it's kind of like gas prices I showed you a minute ago. It tends to sort of flatten out there. That'd actually be a fun one to go through. Housing prices versus the housing products, building materials. Yep. Yeah, Dr. Horton, man, you got it figured out, man. Wish I could replicate you. Sell when you can, not when you have to. I love it. Mm-hmm. I love it. Yeah, hopefully we do get that that sort of blow off top, whatever you want to call it. I call it climactic move in the markets there. Again, it's a tough one to watch because it's the same thing on the way down. When you're falling really rapidly, it's exciting at first, and then after a while, you're like, I don't know, is this a little bit tough here? But hopefully we can get that. Mm-hmm. Hey, Justin's got a little extra cash in the bank. Let's figure out where he lives. You want wait for a down move to invest. Well, it depends on what you're investing for. If it's a short-term kind of investment, 2 years or less, then you can afford to sit back a little bit and scale in on a down move. If you're talking about retirement or 10 years, something long term, then I've actually done classes on that in the past where what happens if all you did was keep your money in the bank and you were just so lucky that every time you invested happened to be that top in the market, would you still be all right in the long term? And you actually do really, really well. So if it's for the long term, I'm a little more hesitant to say wait for the markets to pull back, although I can't blame you. But I'm a little more hesitant to say that. It's a short-term investment. Okay, you're scaling into something more conservative anyways. You're going to get less volatility there. So I would start to scale in little by little. Now, knowing me, I would just do it in pieces. There's no way I would just commit some lump sum of dollars here. Couldn't do it. Could not do it. What's the matter with my hair? Everybody picks on my hair. I'm just happy to have hair up there, guys. What are we doing? Oh, he's serious about the hair. Oh, all right. Well, thank you. I like that. Yeah, I go right for it. Like something's wrong. Yeah, I'm just happy there's still something there, man. It does look good though, doesn't it? Yeah, it's all right. All right, I appreciate that. Thank you. Well, hey, have a great rest of your day. We're going to wrap it up, get on out of here. I'll be recording the class for Wine and Wealth tonight, talking about our positions and updates. You guys have a great rest of your day, and yeah, thanks for your support. We'll see you.